not a lot of people knows the face behind Ringgit Plus. They know the brand, obviously. Do you mind doing a brief introduction about yourself prior to Ringgit Plus and what you were doing?
So, well, I mean, one thing is cool. So there were several faces, right? I'm one of six co-founders, one of whom was
Oh,
on earlier with you this week.
six. Wow.
There were six of us, yeah. I think Han was on earlier this week, right? So, bit of background on myself, right? I started my career in banking. I was with Citi at the time. It was called Citigroup. I think now they're just called Citi. I was working in investment banking and then leverage lending in London. I left there in 2000, end of 2006, to join a hedge fund. We were the world's largest short-only equity hedge fund. I covered banks globally, which was super interesting because it was from 2007 to 2010. So the global financial crisis, which was just a crazy time, not dissimilar to what we're seeing now, right, in global markets. 2010, decided to come back to Malaysia. Spent a couple of years in a traditional media company, mostly outdoor media. And then kind of 2012, for people who remember back then, the online, I say the e-commerce industry just really started to come to life, right? Prior to then, the joke was that people only bought airline tickets and cinema tickets online, right? Everything else you still did physically. But you suddenly had all this money come into Southeast Asia. First, it was through Rocket Internet, right? Through companies like Groupon. And it was crazy. We went from doing almost nothing, or having almost no transactions online, to people transacting constantly online, right? First with Groupon, and then I think it was Zalora for fashion. So I looked around and thought, hey, something's changing, right? Like Malaysians are starting to trust the internet. So that's when I started what went on to become Ringgit Plus
Yeah,
in end of 2012.
yeah. And what was the main reason for you to pivot away from, hedge fund, the banking industry and whatnot?
Well, good question. I don't think there was one thing. I came back to Malaysia partly because I'm Malaysian, right? I grew up here, and I think the longer I spent away, the more I felt that if I spent the longer I would spend away, the harder it would be to come back,
Yeah.
right? So I think that was the first step to move back to Malaysia. And then I'd always when I was in the UK, I always loved a service called Money Supermarket, right? Every
Mm.
time I needed a financial product, I would just go online and I would apply for banking products, so I buy insurance, everything through Money Supermarket. And then when I came back to Malaysia in 2010, everything was so manual, right? To open a bank account, I remember, I spent like 2 hours in a bank just to open up a bank account.
Yeah.
To get a credit card, I had to like walk around malls to find someone to sell me a credit card. So it was really, I just found it wasn't very efficient. And to me, from the business point of view, I can see that, hey, banks are really wasting a lot of money, right?
Mm.
Distributing the financial products. So, what if I could copy what Money Supermarket did in the UK and do that first in Malaysia and then in other markets in the region?
Yeah. I think the first thing that Malaysians will say when they hear you is that, well, you don't sound quite a lot like Malaysian. You sound a bit more,
Absolutely.
like a foreigner. Is that because of your years in the UK and
Yeah,
yeah, yeah,
I spent a
I
long time there.
suppose.
So
Yeah,
at the point when I came back, I had been there for half my life, right? For
right,
almost 14
right,
years. Yeah.
right. Yeah, and I'm curious about the Ringgit Plus itself. How
Mhm.
does the company earn revenue? Is it mainly through advertising and
Mhm.
promoting different types of credit cards?
Sure. So I think the easiest way I like to kind of explain how Ringgit Plus works is, think of us as a supermarket for financial products, right? I think that's one part of a
Right.
business. The other part is financial education. But when it comes to the supermarket side, just like any marketplace or any supermarket, right? It's free for the users, right? That's always been important. People always ask me, why don't we charge consumers for name the
Mm.
service, right? But I think it's always important that the services as well as the financial education is always provided for free. So in order to do that, right, on the business side, banks and non-banks will pay us when consumers flow off Ringgit Plus and then apply or buy financial products from them.
Right. So basically, it's taking like a percentage of the sales or whatnot, right?
Correct.
And that is the main where your main revenue comes from. So it's a lot of advertising and also regarding promoting financial literacy and so on and so forth, right?
Absolutely.
Yeah. Now there's another thing which I think is the main topic of tonight's session is the financial literacy survey. conducted by Ringgit Plus every year. I think it
Hmm.
started since, was it 2018? You guys started
Correct.
this survey?
That's first one. Yeah.
Yeah, yeah. Yeah. And what is the objective of this survey apart from promoting financial literacy? How many respondents does it track?
Mm. So on the respondent side, in order to be statistically accurate for the adult population or the working adult population in Malaysia, rule of thumb is at least 3,000,
Oh,
right? So
right.
we
Yeah.
cover we go. I saw last year we did 3,300,
Mm.
adult Malaysians across all of Malaysia. And if I kind of turn my memory back to why did we start, I think one big reason was, um, it's when we think about what kind of content should we create, right? I think you probably go through similar thought process. There's so
Yeah.
much you can cover, right, when it comes to financial education and financial literacy. So we thought, hey, why don't we run a survey, right, to understand what are the biggest issues? Because actually we don't know, right? I think we know when it comes to creating content, you can look at trends, you can see what other people are writing, you can see what consumers react to. But some things are not obvious, right? So like for example, one of the biggest themes in the last couple of years was what we call digital financial literacy, which really revolves around being prepared for scams, right? Which is not something which would have been obvious to us. Something which obviously the regulators are very worried about. But the main goal was, okay, look, let's go and ask Malaysians, right? Firstly, how are they doing, right? And what's working and what's not. And then with that data, then um, we can focus on certain areas with financial education. And what's been really, really, really encouraging through the years is that we've been able to onboard and work with more and more partners, right, in the process. Because financial education, financial literacy, it's such a huge topic, right? There's no way any one company can even scratch the surface, yet alone cover everything. So it's very important for us to not only identify um, where the challenges, right, for majority of Malaysians, and then work with partners to focus on different areas, right? So we will sometimes we work with insurance companies. Sometimes, like for example, this year, you can work with a credit rating agency, such as CTOS. So it's always good to have partners to work with as well.
Yeah, one of the interesting points which the survey noted is that even though the number of Malaysians, the percentage of Malaysians who save more than 500 ringgit per month has increased slightly in the past 3 years, but it is still worrying, right? I think the data pointed out that only 33% of Malaysians manage to set aside more than 500 ringgit per month. So why do you think Malaysians are still struggling to save, considering there's so much financial education on this matter right now?
That's a good question. So I don't have data on how Malaysians compare to say other countries. So I think it's important that to see that the trend is improving, right? Because some years we see it gets worse, and then obviously that's a concern. But it is improving, and I was just looking through the data.
Yeah.
Another thing we found with because we asked this question as well, right? So what are Malaysians doing? How can they do better? And we asked, okay, so what do Malaysians do to actually improve their financial position? And it's very encouraging to see that, okay, look, how do Malaysians work towards saving more? They take very practical steps, right? So they cut back on non-essentials, right? So like they cut back on eating out, they cut back on leisure activities. They actually start creating a financial plan to follow. Um, so it, when you read about all these things, it's not easy, right? And so when I think about this question,
It's
I think
definitely, yeah,
it's hard for I think Malaysians or anybody people have to decide what's important to them,
yeah,
right? And I think you
yeah,
you had a really you highlighted a really interesting case study on your Instagram, right? Of
yeah.
the family which earns I think it's 1,700 ringgit a month,
Right, right, yeah,
and they laid out how they spend their money. And one thing that struck me was that there's everything there is essential, right? There is no room for leisure in their life, but they save money and they buy insurance, and they give money to their parents, but there's no leisure, right?
mm,
So I guess what one part of it is, if you want to work towards these goals, you have to make sacrifices, right?
that is
Whether
true.
it's well, and you look at movements like the FIRE movement too, which I think is
Yeah,
super interesting. How do these people achieve it? Well, I mean, they sacrifice, right? They work extra hard, they save like crazy, they cut back on a lot of non-essentials. Um,
yeah,
and I think my guess would be that not everybody wants to do that, right? Some people, for in the short term, would prefer, okay, look, I want to spend a little bit more on when I'm younger. I want to spend more on leisure, travel, and then maybe I'll start planning for these things when I get older.
yeah. And do you think the reason for us not being able to save more is largely due to Malaysians earning a relatively low income compared to other nations? What do you think about that?
I think let's go back to that case study, right? I think
Yeah,
it's of the family that earned, it's a single
yeah,
single earning, only one of the two parents actually earn income, and it is possible to save, right? They're not saving
yeah.
500, but they're saving 250.
Mm.
I think 500 is for a majority of the population. Perhaps 500 is it's not the easiest amount to save, but it is possible to save, right? I think when it comes to uh, you know, where we stand versus other countries, obviously some people do decide to go and work in other markets, right, where they can earn more. But it's not necessarily the case that you save more,
Yeah.
right? Um, so I don't think I don't think Malaysia's kind of economic situation necessarily prevents people from saving, right? But it might impact, for example, just how much they can save every month.
What about the landscape itself? Like companies, they're encouraging Malaysians to spend this buy now, pay later thing. Does it have a role to play, especially in the younger generation? Because there is actually data saying that youngsters these days they're taking more and more debt, right? These buy now, pay later functions, they order KFC right now. Did you know that recently there's this KFC thing where you can use it to buy now, pay later?
I did see that.
So, so I think it's getting more and more obnoxious. And if you're aware of this situation, do you think this has been preventing Malaysians to save a little bit more?
That's a good question.
Mm,
I think buy now, pay later, like like many financial instruments, can be used effectively if you want to, right? So if there's a product which you need or you want, which you can afford, but which you decide to say break up over three payments over 3 months, and in that time, you can put the money in the bank, earn a bit of interest on it, and then you're able to pay it off fully at the end. I think that's good for the consumer, right? And
do
if
you
you
use buy
use
now, pay later?
sometimes, right, because they give discounts,
Right, right.
and I think that's one reason why these buy now pay later providers are popular, right? It's because it's not just about breaking up the payment; it's also that they give discounts that you would not get otherwise, right? Um, so I think there's definitely positives to it. I think it's also good to see that the regulators are looking at how they can provide more transparency around it, right? So I think if something that would be of concern, for example, is if a particular user is using several of the different buy now pay later services at the same time and overstretches, right? Because in Malaysia with CCRIS, that's not possible with traditional banks, right?
Yes.
Of course, people can overstretch, but there's a limit to it. But with buy now pay later, it's not regulated yet. So I think having the regulators come in uh, and put buy now pay later under their umbrella is good. But similar to any financial product, right? I think it's if you are not aware, right, of your limits, you're not aware what it can do, it can cause problems. But if used properly, it can definitely help.
Yeah, I like the part where you mentioned that because the payment is split across multiple months,
Hmm.
very often it's zero
Correct.
interest, right? And sometimes they give you very big discounts.
Hmm.
So you can use that extra money, leave it in the digital bank or whatsoever to earn additional interest, and at the same time, it helps you pay off slightly
Yeah.
a bit of your monthly payments, right? So I guess it's a tool. It depends on how you use it. And at the end of the day, if you're not really a smart consumer, then you will definitely fall into the debt trap. Another thing, let's stay on this saving part because I think it's pretty interesting. Uh, how do you save actually? What is your strategy when it comes to saving money? Uh, uh, and if you could like turn back time to people like my age, I'm currently
Hmm.
28.
Yep.
I don't think you're 28 anymore.
I'm,
I
I'm
think you're
fine.
probably
I'm 42.
probably early.
I'm 42.
Oh, okay,
Yeah.
okay, yeah, yeah. So let's say if you could turn back time to your
Mhm.
younger self, what sort of like savings tip and financial strategy that you will, uh, uh, you know, project to yourself?
Hmm. I think the first thing I would say, right, about any kind of saving or investment, the most important thing is that you're comfortable with what you do, right? There's no point following any kind of financial plan or investment advice if it makes you uncomfortable, right? If you can't sleep at night, um, there's no point. Uh, I think like Warren Buffett and Charlie Munger say, right, if you're not willing for stock, if you're not willing to see your investments drop 50%, you probably should make that investment.
Yeah,
But if I was to turn back the clock, I would have done more dollar cost averaging into the global, like you could either the S&P or like an all world index, right?
Mm,
I think that is, especially when I was younger, right? Because the general rule of thumb is that the younger you are, the more risk you take, right? And then the older you are, the less risk you take. I'm 42, still relatively young, right? For in terms of my whole adult life. But I think it doesn't matter how little you save. I think as long as you start and you do it consistently through the years, then that action of dollar cost averaging into equity markets works over the long run.
mm, mm. And your saving strategy right now,
Hmm.
what do you do when you get your pay? Do you like pay yourself first or whatnot?
It's a mixture. It depends what's happening, right? So I think it's similar to I read a lot about what you do. So it's very similar for cash. I look at which service or account is providing the highest interest, right? We're very lucky in Malaysia.
Mm,
It's not bad, right? You can earn easily
yeah,
3 to 3.5%, if not more, almost risk-free and with instant access to your money, right? So that's kind of park the money there, and then I, I do lots and lots of little things, right? So put some money into the what are they called? P2P services, right? You can earn,
oh,
gross on P2P, they offer high single digit, but after tax, it's kind of let's call it six, I think they can do after tax, which is double what you get from an FD. Relatively safe, right? They're not zero default, but decent. So that's the kind of the debt piece. And if equities are like a mix of dividend and value. But it
right.
is no, I don't, I don't have like a fixed schedule. It kind of depends on when I can and when I can't
Right.
for the investment side.
I think the most important takeaway which I got from you is that your money is always growing, right? There is never a point of time where you leave it dormant
Mm,
and then it doesn't earn interest, right? And considering right now there's so many different types of products out there, it's so easy to register for a digital bank. I'm so surprised, all these digital banks these days takes minutes only, right?
it's
Like
fantastic.
it's
Yeah, yeah,
yes, it's fantastic, right?
yeah.
Right. Which leads me to my next question now. What do you think about digital banks? Uh, are they already displacing traditional banks?
Yeah. Um, I don't think digital banks in any market are going to displace traditional banks anytime soon, right?
Wow.
Just because of how big they are. The gap is massive. But having said that, right, what I think digital banks are fantastic for the consumer. Um, just right now you have
I think it's four. Is it four digital banks? Right.
three are launched, right? But I'm just trying to think of the interest rates. So it's Aon that's giving
Oh,
you 3% in your savings accounts. Grab started at 3, they dropped back to 2. So having more competition is really good for the consumer, right? Right now you only see it in the savings accounts. I think the cashbacks on some of them are pretty good. Like if you're an Aon
yes.
shopper, if you use the Aon Bank card, you get fantastic bonuses um, on your card. If you're a Grab user and you pay through JX Bank, you get extra points, right? So consumers are doing better, right? And because digital banks coming aboard and doing that, then other people are competing too, right? You've got Versa increasing their interest rates. You got more money market funds, digital money market funds coming online. And it's so different now, right? These last couple of years, I think it was during and coming out of COVID, there's been so
Yes.
much innovation um, that for when it comes to basic financial products, right? For consumers, there's more competition, which basically means uh, better products, better value. More people trying to help consumers. So I think there's ultimately it's good for consumer, but when it comes to challenging the traditional banks, there's just too much of a gap in the short term, right? I don't
Mm,
think they're gonna really make that much of a dent.
okay. Let's go back to the survey lah, because there are quite a few interesting points of the done by the survey also. It found that 39% of respondents, only 39%,
Mm, mm.
can survive 4 months or longer without any income. So why did Ringgit Plus actually choose 4 months? Why not 6 months? Why not 12 months? And how can we better ourselves for financial shocks and unexpected events?
I think actually I remember asking the team about this as well. I think there's a general rule of thumb that you should be able to survive at least 3 months, right, with your emergency
Yes.
savings, because that's roughly how long it would take to find another job, right? So we looked at that and said, okay, well, why don't we stretch it a little bit further than 4 months, right, to set the bar high. But that was the rationale for the period of time, right? If you were to, of course, the more you have, the better. But for the target audience for this is working adults, right? So how long, on average, how long would it take you, if you were to, hit an emergency and lose your job, how long do we think it would take to find another job? And I think kind of 2 to 4 months is still reasonable, right, in Malaysia. Um, what can we do to better prepare ourselves? That's a tough one, right? I think it's having your emergency savings is absolutely key, right? And making sure it is emergency savings, right? If you making sure that it is accessible. So, for example, if you save up, if you have cash for 3 to 4 months of expenses, don't go and invest it all and lock it up, right, in something that's high risk or not liquid. And make sure it is accessible. Um, what else can we do?
I think regarding the emergency savings part, right? Do you think it's going to be a norm for people to save up 6 to 12 months, or are you still sticking with the 2 to 4 months thing?
Hmm,
Considering the current state of the
and
markets and all the uncertainties, right? Right.
Oh, so many questions there.
Yeah.
I don't think we will move away from this benchmark because
Mm,
I think the goal is for this particular part of the survey, um, the goal was to understand specifically on emergency savings, right? So I think 3 to 4 months is okay for emergency savings. I think in a world where the majority of the population needs 12 months, that's a separate issue, right? I think
mm.
if we run into that world, then none of the traditional rules are going to apply. So I don't think we're going there. I think for now, Malaysia's pretty healthy economy. I think even if we do have, and I don't, even if we do have a trade war, I think Malaysia's relatively better off than a lot of places. I don't think 12 months is going to be the norm.
Okay. Okay. Yeah. So apart from emergency funds, is there anything that you're currently doing to prepare yourself from financial shocks or unexpected events?
Oh, good question. Nothing unusual, right?
Mm,
I think it's a good question for myself. Not really. I think making sure the cash is there, um, or however long it's required. I think it's something we will talk about the trade war later.
yeah.
I
Yes.
don't think it's going to be. I hope not. For now, I don't think it's going to be kind of world ending.
Yeah.
But so I'm just continuing, and I think whenever you see this kind of dislocation in global markets, if you do like to invest, then it can be a good time to dip to kind of increase some of the risk positions.
Yeah. Now, EPF, they was it last year? I think it was last year. Yeah, definitely last year. They announced the account tree
Mm,
flexible, which allows citizens to withdraw 10% of their
mm,
balance anytime they want. So some financial advisors, including Han himself, have been advocating using EPF account tree as emergency funds. So what do you think about that?
I think if you have no other choice and you need it, then by all means take it. Absolutely.
Okay.
Right. I think that's why the government did that, right?
Mm,
Actually, we didn't. I forgot we didn't talk about EPF. EPF is amazing, right? The fact that it is pre-tax, um, the fact that your employer matches, right, your contribution, it is extremely well managed, right? It is an incredible retirement fund, right? Much stronger than what I think CPF offers in Singapore,
yes.
and because it's really quite an incredible institution. So. Um, if you really need it, then why not?
So let me move on to another question. Also, an interesting observation is that the people who earn
Mm,
more than 10,000 ringgit per month, this group, they are typically considered T20s. However, only 48% of them, 48% of them, which is
mm,
a substantial amount, they
yeah.
are living from paycheck to paycheck.
Hmm.
So I think this is quite odd, especially when this group belongs to the T20, right? What's with this the part of the survey here?
Yeah, this was super interesting. I think one of the reasons why we highlighted this was I think to show that higher income does not necessarily mean better prepared, right? Um, and it's important because sometimes I think obviously the less you earn, the harder you feel it to be, right? Because your essentials, there's only so low you can go for your essential costs. So it's very natural, and I think it's fair to say, look, the less you earn, the harder it is to save. But it's important to highlight that hey, just because you earn more, it doesn't mean that you have a free ride when it comes to financial independence and good financial planning. And there's and as the data shows, I think as you earn more, it's very hard to avoid lifestyle inflation, right?
Yeah,
You have a higher salary, you want to live in a bigger house,
live a
you
bigger
want to do some
house.
renovations, you want to drive a nicer car, you want to travel more, because you can afford it,
Yeah,
right? So I think that's
one
that's probably
of
what's
the
happening
traps,
here.
right?
Yeah.
Yeah, one of the traps. Yeah. So how do you prevent yourself from falling for lifestyle inflation? I mean, obviously, as your earnings grew as well, as your career progressed, definitely you will opt for a bigger house or probably, maybe get a nicer car or something like that, right?
Mm. Well, you can,
Yes.
but I think again it comes back to an earlier point, right? Which is, what it's it very much depends on for each individual, what do you want at that point in your life, right? If you're willing to take the risk and you want to enjoy life, of course, right? On paper, you should save more, right? You shouldn't spend so much. You should invest. But if it's your choice to do that, then that's a tricky part. That's a tricky part to fix.
Mm,
Right? I think in Malaysia, having EPF is a slight buffer for that. Right? So for people in this income group, they are getting decent EPF contributions every
yeah,
month, and as long as they stay in that, and they grow well as long as they grow their incomes, over time they will have a decent sized nest egg. Um, and actually, that's something which doesn't get captured at all, right, in the survey, right? Which is the money that sits in EPF because you can't touch it, right, until you reach a certain age. Um, but it's very hard to to change people's behaviors. Right? I think in Malaysia we are lucky with things like EPF, with things like a very strong financial system. Um, but if people want to spend more as they earn more, that's very much their choice.
yeah. Then how do you do it? Do you prioritize like increasing your income or do you try and cap yourself when it comes to lifestyle inflation?
I think a lot they made a lot of mistakes through the years, right? Should have saved more when I was younger. Um, save and invest first, right? So
Right.
set those goals and then put the money away. Um, and what's it, like you can never. I mean, for me, is like you can't have everything, right?
Mm,
So decide what's really, really important, um, and then just have a little bit for that, and then everything else, just try and be as disciplined as possible. But
right.
it's yeah. I think the reality it's very easy to uh, to want more, right? I think and that's very natural. Um,
Very easy, yeah. There are quite a few other observations from the survey
mm,
as well, which I didn't really plan this question. And you mentioned just now during our rehearsal is that social media right now is
mm,
transitioning to become an educational hub. Yeah, there's this a scoreboard, and social media platforms came out on top when it comes for uh, the place for Malaysians to look for
mm.
financial advice, financial matters, right? So why do you think this trend is happening, and what other observations are you seeing from this?
Well, this was super interesting for us, partly as a business as well as part of the survey, because as a business we want to understand, okay, where do Malaysians go, right?
Yes,
When they've got questions about their personal finance, because that's where we want to be. That's where we want to make sure our educational content is. And when we first started the survey, it was always friends and family, right? And that's tough because we're not a friend and family, right? We're a platform, so what can we do? Uh, but if you look at the top score, it's friends and family, and then people will go to the banks or the agents, right? But over the years, right, social media, especially after COVID, social media has grown and grown, and it's now social media is marked as the most trusted source of financial information. And of course, look, right, we're doing a talk now on Instagram. You've built out a
yes,
fantastic following on social media, um, and I think it's net. I think it is really good, right? That is an easy way for more people to get free, fair access to financial education content. Um, but then, of course, yeah, the next challenge is, well, how do you know who you can trust, right, as a consumer?
mm, yeah. But I think you were looking at a question there just now, right? uh,
You must have a good answer to that question.
what is this question? Let me have a look at it. Carmen. Okay, hi. Thanks so much for the discussion. How much would you think a freshie should allocate to investment and savings, assuming they spent 50% on necessities already? I mean, I'll let you take it Let's go ahead, YT. What do you think?
I don't have a good answer, right? I think there's so many frameworks available. There's no good answer for this. It's
I mean, if you were the freshie, what do you do? Yeah, if you were the freshie, you had 50%
mm,
allocated to your
mm,
necessities, right? Right, and then you are thinking to set aside some money. What would the percentage be, or would you just go about like depends on every month my spending, so on and so forth.
what's the rule of thumb? Something around somewhere between 10 to 30% if you can do it, right? 30% can be quite high.
Mm,
10% is a little bit on the lower side,
mm,
but I think depending on what's available, whether it's your base salary, if you do earn side income or bonus, I would save as much of that as possible, right?
yeah,
Um, so. And that's another thing, right? For people who do get the bonuses, whether it's 1 month or a couple months, the temptation is to spend it, right? I think
yeah,
that's a fantastic way to save. And I like even when I was in banking, a lot of the bankers I knew would save all their bonus, right? And you can imagine after a couple of years, then that becomes quite significant. But for I think for your monthly salaries, uh, I would the most practical answer is as much as you can, right? As much as you're comfortable with. But what's the rule of thumb? It's about 10, 20%. I think
I think there are several
if
rules.
possible. Yeah,
Yeah, there are several rules. There's this 50-30-20 one, which I used to follow,
yeah,
which allocates
mm,
20% into your savings and investment. Basically, that 20% you allocate it for your future.
yeah,
The 30% you spend it on whatever you want. So, you want to buy a new handbag, you want
yeah.
to buy a new handphone or whatsoever. Yeah. Then as much as possible, use that 30%, and then the remaining 50%, well, you allocate it to your necessities, you pay your bills, you pay
Mhm.
your rent, etc., etc. Yeah, but I agree very much with what you said. It's very difficult for us to tell the public what to do, what sort of figures are the best, because everybody lives a different life, right?
Right.
Everybody has their own way of spending money. So if you find a budget that you can follow, that helps you save money every month, then I think you're pretty much good to go already, right? So yeah. We do have a few more planned questions left. Now, this one is another interesting one, Trump's tariffs.
Oh no.
Yeah. It has plunged the global market into turmoil.
Yes.
I received a lot of DMs of people asking me, what do you think about this? Should I invest in the markets right now or not? It's dipping. It has rebounded recently because Trump has decided to do like a 90-day pause on all of those tariffs, but there is still a 10% baseline tariff on all the nations. So I just want to have your opinion on this, because you've been doing a lot of reading. What are your views in investing in the markets right now, considering that it's so volatile?
Um, I think that one of the most important things is to always just stay diversified and disciplined, right? Even if you see this, even if you believe this is a good opportunity, never go all in on anything, right? So stay diversified and don't overdo it. I think, yeah, that's the first rule. Um, my sense is having watched the last, I can't remember, when did he come out? Last Friday? Having watched what he's done, I think uh, my guess would be that, or my read of the situation is that the Donald Trump has used the tariffs to try and get better deals for the US and maybe for people around him, right?
Mm,
I think he's fairly open. It's very unusual for a sitting US president to hold so many assets, either directly or indirectly, and quite publicly, right? Um, his voter base seems to allow that. So uh, I think it's probably a negotiation tool, right? And that's he's already set back the discretionary tariffs.
yeah,
Um, that's firstly, and secondly, he went so far with his tariffs on China to the point where it
yeah,
just became unworkable, right? And that should have been. I mean, hindsight's 2020. Right? But you think back, like he went so far, then China raised. They both went over 100%. Um, and any economist basically said, look, they're so high that they should have just stopped trading, and that's just not practical, right?
yeah,
Like, where's the US going to get some of these things? I It's not wrong for countries to have tariffs and to try and protect their own industries, right? We do it in Malaysia. Right? That's why we have local car industry, for as an example. So that's not wrong, but I think he went so far, and then he pulled it back, and he there's that I think he's to some extent he's kind of shown his hand,
yeah,
that it's a negotiating tool. And secondly, he's being it's actually not the equity markets it's being punished by, right? The equity markets don't have a huge amount of consequence in terms of the financial system or the US government. The problem he faced was the impact it had on US government debt, right?
Mm,
As he continued to kind of go back and forth with his decisions, you've seen the cost of borrowing for the US government go up. And that is extremely serious, right? You saw liquidity go down a bit, you saw spreads widen, which means it's going to cost the US government more to borrow. And when that's happened, that's when he was forced to kind of pull back,
mm.
right? So now the last problem he's left with is China, right? Um,
Yeah,
so taking all that into account, I can't tell the future. So what I'm doing is I'll invest a little more than normal, right? In risk assets, right? And there's various ways to do that. So I think for people who do invest in equities, or global equities, now is not a terrible time, right? If you saw like
right.
Bursa, right? A lot of great stocks in Bursa sold off massively, and they bounced back again very fast.
Yeah,
And same with a lot of US blue chip stocks, Chinese blue chip stocks. So I think it's not a time to maybe take a little bit more risk, but I still would do it gradually over time, but just maybe increase the allocation now and watch.
yeah. So your your viewpoint is that even with this so many issues going on in the US right now, and many people questioning whether the US is still a good place to invest,
Mm,
or your approach is your approach is to go even more. I mean, increase the monthly investments even more, but obviously don't go all in.
correct.
You know, because I think you told me this before. When there's blood on the streets, it's a good time to acquire more, right? And tracing back to, was it Warren Buffett? Was he says it's like fearful when others are greedy,
Be
greedy when
be
others are fearful. Yeah,
be greedy when others are
yeah,
fearful, and
yeah.
and fearful when others are greedy. The slight caveat here is that if for whatever reason he decides to continue and hold those tariff rates, which I don't think he will, then the reality is it will be a lot worse than it is now.
Mm.
But that's
Well,
unlikely. Yeah.
yeah. When you say that's unlikely, that's true because right now he has already released exempted tariffs for iPhones and semiconductors, right? So yeah, we'll see
Where are
where
you
it
going to get
goes
the
in the
computers
future.
from? Like, where, people need computers. Where are you going to get it from? You don't actually need an iPhone, right? Like, you can still use your iPhone for another 6 to 12 months or even longer if you want. But if your computer breaks, which they do, you need a new computer. Where are you going to get it from? It's
Yeah,
just they don't come from anywhere else in the world, right? At that volume,
yeah,
which just shows just that lack of planning and the fact that he did not intend. I don't think he intended for it to go that far with China.
yeah. It was pretty out of hand, and it still is out of hand considering that they're trying to hold the terrorists tit for tat right now. Yeah. Well, I guess we move on to the next question, which is from the community as well. Izzy on the road says EPF data says require 1.3 million for retirement.
Hmm.
What is the expected expenses that require this amount? Does this include mortgage as well? Wow, there's a lot of calculations that we need to do on top of our head. So I'll let you
You
take it first. I'm going to bring up my calculator real quick.
I can't do the maths off the top of my head, but I actually remember reading it, right? That
Oh,
how long would it
yeah,
take?
yeah,
It
yeah.
depends on your earnings. How long does it take to earn 1.3 million in your EPF? You have a
Uh,
post on this, right?
yeah,
Let's have a look.
I had a post on this. It is the pin post on our
Hmm.
profile. I can't have a look at it
I
right
can,
now
I can,
because of
I
the
can
like
put it up. Hold on, where is it?
yeah
How
and
difficult is it? Okay, let's see.
yeah that's but that's the data to achieve 1 million.
Hmm.
So it's slightly outdated. It's not 1.3 million now. But you know, sort of around that ballpark. You increase the amounts by 20 to 30%. So that should be it, I guess. So what does the table say?
You would
Let me
need to
have
contribute 1,000 per month to hit 1 million by 55.
okay. Starting
And this
at the
is
age of 24, right?
starting at the age of 24, assuming EPF continues to pay 5.5. I believe plus
Okay.
or minus the
Okay.
here we
Okay,
go.
then I think if you scroll right more, there
Hmm.
is like a table over there which
Monthly.
gives you the, the savings.
Yeah, so it depends how early you start, right? So if you're on your 20s, 25 to 29, it's 1,000 to 1,003. And then you add, if you're on your early 30s, 30 to 34, then it's
Mm.
1,003 to 1,008. So it depends when you start saving. So I suspect that the audience here is very young, right? Listening to IG.
Yeah.
There may be a few silver surfers. But I think if you're on your or if you're in your late 20s or early 30s, then, you know, nine, call it 1,000 to 1,000. or maybe 1,005, right? If you round it up.
Yeah.
And then 1,003 to 1,008, so call it closer to 2,000 a month. So
And I think
2,000.
the question itself is also asking, what sort of expenses should you look at every month, lah. So fortunately, I have the data. This was published by EPF themselves. 1.3 million by the age of, actually it's not 55, it's by the age of 60 right now. They
Oh, they
very
pushed it up.
stealthily, yeah, very stealthily, just very low key, just raise it up to 60. Didn't want to draw a huge backlash. But by the way, guys, retirement age has been raised to 60 according to EPF. Okay, and this amount, 1.3 million, is based on twice the Belanjawanku study senior singles living in the Klang Valley right now, which is about, is it 2,450, I think. So it's about 5.9K every month. Okay, you get to spend for the next 20 years. Yeah, yeah. Does this include mortgage? I don't think so. I think by the age of 60, what do you think, YT? You don't need to be, you aren't supposed to be on any mortgage loans anymore, right? So you're supposed to be finished paying all your mortgage loans, right? I suppose.
I think in a positive scenario, yeah, you should have, you would have been in your forever home for some time, paid off your mortgage, right?
Mm,
And have your
mm.
kids or grandchildren visiting you in a good scenario, right?
Yeah, yeah. Okay. Yeah. Hopefully that answers the question. Next one we have from Messy Spaghetti. Wow, very nice name. What are the worst mistakes someone can make financially in their late 20s? Oh, this is interesting. Are you seeing
Oh
these
wow.
mistakes pop up in the survey? Wow. Go ahead, YT. Yeah.
I mean, we good question. We don't ask such specific questions about what are the worst mistakes. For financially, the worst mistakes.
Yeah.
I never really thought about this. We always get asked the other way around, right? That's what you should do. So what shouldn't you do? So I mean, what are the things that can have like a long-lasting negative impact on your life, right? So in a world where you don't save and you just spend everything and you wait 5 to 10 years before you start saving, okay, so you start saving later. Maybe you have to work for longer, right, to reach your retirement savings. But that's a choice you made. You had a lot more fun in your youth, right? Uh,
A lot more fun. Yeah.
yeah,
But
that's whatever whatever makes you happy. The mistakes. Uh, Good question. I think things that can have kind of a lasting impact financially would be ending up over leveraged, right? Whether it's ending up in AKPK or
yeah,
ending up
debts, right?
doing or ending up doing damage to your credit score. I think those are things that are fairly dangerous, right? Because they leave a mark on your financial history that can be quite hard to recover from.
And here's the thing, right? Because we touched on buy now, pay
Mm,
later, earlier during the session. Is it sort of like a gateway for bad financial habits to begin? I'm not trying to reel you in to say
that's,
something bad about buy now, pay later,
mm,
but I'm
mm,
saying that if this consumer, doesn't really have
mm,
any education in finance, and then they see this iPhone,
mm,
wow, it's currently 6,000 ringgit, but then
mm.
they have an option to buy now, pay later, it's only about 300 ringgit. They think they can afford it. They end up buying shoes for like
Mm.
60 ringgit a month. They end up buying handbags for like 200 ringgit a month. So then it becomes sort of like a gateway, isn't it? What do you think?
Hmm. So if I was to kind of paraphrase that,
Mm,
is it a gateway? I think to be fair, the ability to make bad financial decisions has existed for a long time before buy now, pay later, right?
right.
Whether it's
Okay.
through,
Fair enough.
credit cards. And, credit cards is a big part of what we do, right? You go to RinggitPlus, you'll see that we have the best offers, right, to apply for a credit card. But at the same time, a lot of people who I've met, especially younger generation, people say 10, people in the 30s, a lot of people in the 30s I met would say actually they will never take a credit card again, right? Because they took
Mm,
one when they were young. They spent more than they could earn, right? And they just couldn't control it. And because of that, they stick to debit cards, right? And that's, okay. I think that's one example of the, problems that have existed with existing financial products. So it's not just buy now, pay later. I think any credit product, um, if used irresponsibly, can cause problems.
I think that is the advice, right? I mean, be wary of credit products and don't over leverage, right? Don't end up in AKPK and declare bankruptcy or whatnot. Those are the financial things that is uh, very hard to recover from, right? I suppose.
Yeah, yeah. I think it's good that there are options for consumers who do run into those situations.
Mm,
Um, it's good that BNM has set up, the agency to help. But if there's one thing to avoid, that would be it. Yeah.
yeah. Okay, so next one by Ricky. For a university student in their early 20s, what are some important advice slash things to ensure that they don't regret it down the line? Oof. Wow, asking about a lot of financial tips right now, and rewinding back the time, so on and so forth. Yeah, so go ahead, YT. I think you touched on it briefly just now also, right?
I think like a very broad piece of advice would be always do your research,
Mm,
right? I watched the TV show, and there's a Russian proverb, right, which is trust but verify. We talk about where you go for information. I think there's so much information available now. If you're not sure about something, right? Google. You can search on YouTube, you can search on Google, you can ask ChatGPT, you can go on TikTok, right? There's so many sources. Check what all those sources say. When it comes to something you're not sure about, to always read the details, always read the T&Cs. Beyond that, it's tricky, right? Do you want to follow like a fire, right? Financial independence, retire early, right? Or do you want to enjoy your 20s and your 30s before you decide to settle down? I think that's very personal and that's very much up to you,
yes.
right? But when it comes to that's with the money you earn, right? Whether you choose to save it, or whether you choose to spend it. But living within your means is so much easier said than done,
Yeah.
right? Trying to avoid lifestyle inflation. But when it comes to financial products, just read the T&Cs, right? And read the T&Cs. Be careful. Uh, whatever financial product it is.
Yeah. I think for me it would be similar to your advice as well, right? Be careful of what people are trying to say online, especially financial influencers, especially people like us, including myself, right? Because we are humans as well. We are subject to bias, and sometimes some financial influencers, they are paid to say certain things, right? They only give you the ring of the rose of the side of the story, right? They don't give you the what's behind, what are the specific T&Cs that you're supposed to meet and whatnot, right? So be very careful when it comes to products recommended by other people, including your friends and family, especially financial influencers, right? Including ourselves as well, the futurists. Yeah, so make sure to take like 5, 10, or even 30 minutes to do your research. Lah. I think buying credit card or Ringgit Plus as well, you definitely have to do your own research, right? So that's
Always
that's one thing.
read. Always
Yeah,
trust but verify. I love that saying.
yeah, yeah. Okay, next one by Jinden Badsha, who is one of our patrons. Shout out. Yeah. If a trade war does escalate, in your opinion, would customers shift to cheaper alternatives from other countries or stop buying altogether? And what happens to priced in futures, renegotiation, and whatnot? Wow, this is quite a theoretical question. What do you think?
The honest, I don't know. Um, it's really tricky, right? I think when you,
It's tricky.
yeah, because I like to buy equities, trying to figure out all the what are the various different futures you could run into right now. In the middle ground, there's too many variables, right? Because you just don't know ultimately what's going to happen if a couple countries decide to fight and a couple don't. It's very hard, uh, very hard to figure out
Yeah,
specifics. So the honest answer is I don't know. This is the kind of the middle ground. I think on the two extremes are fairly easy, but the middle ground you're definitely going to get some dislocations. But nobody knows what's going to happen to prices of products.
yeah. I think regarding this uncertainty, the probably the best approach is to ensure that you have enough emergency funds, right? It may sound a bit cliche, right? It may sound that we are trying to repeat ourselves, but at the end of the day, emergency funds really will help you to face an unexpected situation, a job loss or whatsoever. So for those people who don't have it yet, yeah, make sure you take this time to build that emergency fund, lah, because it wouldn't make sense for you to invest in the markets first, and then after that you have to liquidate your investments prematurely, right? At a loss, in fact, because you do not have sufficient emergency funds, right, YT?
Absolutely. Um,
Yeah.
so far in history, the market has always recovered. So far,
Mm.
there's never been a time in history where the equity market has gone down, forever. There've been times in history where it took a long time, right, to recover to the all-time highs, right? The Great Depression in the US, the Japanese crisis, I think it was the 90s, right? It took like almost 20 years. But those are quite rare. Are we in? We could be in one of those situations now, right? If Trump holds tariffs high, it might crash the markets for decades. So, to your point, um, do not put your emergency fund into uh, risky assets.
Right, right. Yeah, so where are you currently storing your emergency funds, if you mind sharing a bit? Which app are you
Uh,
using? Which is your favorite?
right now it's KDI, right? Because it's up to it's 4%, then it's 4, then 3.5. I can't remember the limits.
Mm, mm.
KDI for some, and Aon is at 3%, right? Which is available in real time. So I use those two
Okay,
mainly, yeah, for
okay,
short-term cash.
okay, okay. Yeah, because I personally haven't tried KDI before, and I've heard quite a few people saying that the layout is not
I
very
know what you're
user
gonna say.
friendly.
Yeah,
Yeah,
true. Uh, but it's the rates are
this is the highest, right?
it is, and
Yeah,
Kananga is a very big, safe bank, investment bank. They know what they're
right.
doing.
So oh yeah, yeah. I keep forgetting that the entity behind it is Kananga, so
Correct.
that gives it a lot of credibility, right? Yeah. So I suppose you are somewhat of a yield hunter. You know, you go for those with the highest yields, and would
As long as it's safe, right?
yeah, yeah,
Yeah.
obviously, yeah. So if let's say you have one particular digital bank giving 4%,
Mm,
and one particular another one giving you like 3.5 or even 3.8, would you be tempted to move the money
sure.
over,
Why
considering?
not?
Okay,
Absolutely. Why not?
okay, okay. Yeah, because my approach is that I'm already using so many apps, managing so many things. Like I wouldn't put so mathematically. I need your opinion on this, lah. Because mathematically, a 0.1% profit,
Okay, point one,
an additional zero point
maybe
one
not
percent.
that, but I think
Yeah.
if it's up to like point 0.5, yeah, why not? So the difference
Oh, so
between
point five.
like between 3 and 3.5 for sure. I think point 0.1, and I think that the banks know this, right? The ones that are
Mm,
trying to stand out, they will push up, they'll try and get that 50 basis, but that 0.5% ahead. Um,
okay.
I think that's probably kind of the material limit. It's only in FDs where they sometimes only move like 0.1%, right? But those amounts are
Yeah.
much bigger and you hold them for much longer.
So yeah, when you talk about FDs, right? What do you think about fixed deposits right now? Do you think they are still a viable avenue for beginners to start their financial journey, or right now with the existence of digital banks, it sort of
Question.
makes all these FDs obsolete?
You're talking about beginners, so young people with emergency funds?
Yeah, yeah.
That's a good question. What, a 12-month FD now? Some banks you can push up to 3.94%. Mm.
Yes.
But then by definition, it's not an emergency fund, right? Because if you need it
Yep.
within during those 3 months, then it doesn't work. So yeah, I guess for you're right, for short term emergency funds, why not just keep it in, or you can keep it in your TNG Go Plus, right? 3.5.
Yeah.
There's so many providers coming out at that 3 to 3.5 range. You're really sport for you just pointed out, right? You're sport for choice. You've got too many apps and you're trying to move money around too many
Too
places.
many apps.
It doesn't necessarily make that much difference for your emergency savings. Yeah.
And is Ringgit Plus working on anything new this year or perhaps next year? Maybe
Mm.
launch your own financial product or whatnot.
That one a bit tricky
Mm,
because we are a marketplace, right?
okay.
It's very tempting, but uh, I think the financial products are we think of it as like the banks or insurance companies are manufacturers, right? Um, and it's very difficult. It's very difficult to move from what we do to manufacturing. Running and building a bank is tough, right? It's not like building a simple consumer product, which again isn't easy. But when it comes to financial products, the regulations, the operations, the compliance, the funding, it's the scale which you need, right? Even when the digital bank is coming out, people asking us, "Oh, why don't we turn Ringgit Plus into a digital bank, or why don't we launch digital banking
Yeah.
products?"
Yeah, why not? Yeah.
But there's it one. I, I think the short answer would be that we've built the business and the brand around helping Malaysians make better financial decisions, being impartial, right, being a marketplace, and we can't do that if we're a single bank or a single product provider.
Mm. Yeah, that's true. Because if you guys were to launch a product itself, then you sort of like become a bit more biased towards your own product already, right? And you no longer become a marketplace
Right.
that that is trying to be as neutral as possible, right? So
Yeah. But I think what we are doing, I can share. We for some strange, weird, and wonderful reasons that we don't need to get into. Ringer Plus is only in English, has always been in English. We did this because
oh
when we
yeah,
started, I know,
yeah,
yeah, right. You don't notice because you read in English. We did this because when we started, we're like, well, all the bank sites are in English, right? So we guess everyone reads stuff in English. Um, so we are starting off with the Bahasa version of the site, right? So, and then that's just not the website, that's everything, that's the content. The education will have to be bilingual, and then eventually we want it to be trilingual. We also do want to add more products for comparison. Right now it's very much based around financial products. We'd love to add things like telco products. We see, for example, that there's more choice coming in for things like home broadband, right? Where
right.
offers are getting better for consumers. Consumers are starting to compare, and then the providers are starting to compete as well, which is good for the consumer. So I think the short term is Bahasa, and then kind of medium term is adding more products that consumers can kind of research, find, and apply on the site.
Yeah, I think it'd be interesting if Ringgit Plus were to add the comparisons for debit cards as well, right? Because currently I think that you guys only compare credit cards, right? Do
Mhm.
you guys does Ringgit Plus
Correct. I
compare
think
debit cards?
no, because historically
Yeah.
there was no value propositions.
Yeah, because more and more people are starting to use debit cards. I don't have the official data
Mm.
yet, but
Oh, it's
but
huge. Debit card usage is huge, but
yeah.
up until recently there was no value to it, right?
Mm. Then came digital banks, then came the interest rates that they offer, and right now they offer cashback as well,
Mm.
right?
That's a
So
good
so
point, actually. We were just talking
yeah,
about this actually. Yeah.
yeah. It will be interesting to have like an official site to have a real-time sort of like comparison between which debit card is the best, what sort of digital bank is giving you the highest rates right now. And considering there are so many cash apps out there, how many are there actually? I think there's more than 10, right? I think at least close to 20 right now already. There's Versa,
So,
there's
so many cash
Aeon
apps.
Bank. Yeah,
And there'll
it's
be more coming, right? Because it's just become easier and easier, right, to create money market funds that are available to consumers.
mm, mm. But I think that's good news for us consumers, like, because the competition will keep all
And not
these
just
rates high.
money market funds, right? Like if you want to buy shares, there's so many. Moomoo,
Yeah,
Malacca Security, M Plus, Webull, right? All these guys came into the market providing, more solutions that are, and these are important, right? Because these are locally regulated
yep,
trading platforms. So there's almost every area when it got personal finance, right? There are more providers coming in, providing more competition, and therefore more value back to consumers.
yeah, yeah. One more from Ricky. He says, if you find yourself living from paycheck to paycheck, even after cutting corners, what should someone do to get themselves financially out of disadvantageous position?
Oh, it's tough, right? It's just hard to say what kind of financial position you're in.
Yeah,
So if really, right, if you really can't cut any more, then the other side is your income side, right? How do you earn more? Um, could be a side gig, it could be training, right? So side gig meaning, can you work in your free time? Which is tough, right? 'Cause it's very tiring. Can you work in your free time to earn some extra income? Can you look at your career, right? What do you do? How
upskill.
do you position yourself exactly, right? What kind of
Yeah,
training? And there's so much resources available online. If you want to learn a new skill, right, or improve, get better at what you're doing, so that you can work towards better increments, or perhaps look for a better offer elsewhere.
yeah, yeah. I think that should hopefully help you to get out of an unfortunate financial situation. Yeah. Okay. So I'll pass the last words to you, YT. It's been a long session. If there is like a quick 1 to 2 minute summary for those people who have just joined in, right? What would the takeaway be?
Wow, I mean, Doug, it's firstly, thank you so much, right, for having me, and thanks for everyone who would spend their Sunday
Thanks for
nights
coming. Yeah.
with us. Yeah, I think it was a really cool conversation. Right? I really enjoyed it. I think one theme that kind of came up over and over again. Um, I mean, two themes put together, right? Which is what would I have done when I was younger?
Yes.
And one is that I would have been more disciplined in making sure that whatever happens, I save some, right? And as I was younger, for me, I should have taken more risk, right? I'm quite comfortable with risk in the equity markets. I don't mind if your stocks kind of fall all over the place, because I believe in the long term they will recover, right? So if you're young and you're saving, I would, and if you're comfortable with it, right, take a bit more risk, but be disciplined and always try and put away whatever you can. And the other part is, people always say, well, how much should they save, right? And that's a super difficult question. I think you pointed out, you do write about rules of thumb. Han, my co-founder, was a financial planner. He's looked at a lot of these rules as well. I think the most important thing is look, what people need to decide what's important to them in their life, right? You do all the research you can, but decide what's important to you in your life. You figure out how much you're comfortable saving versus spending, and do your research, right? There's so many fantastic resources, right? Such as yours. Fantastic resource. They go into a huge amount of detail on specifics. So once you decide what you want to do your research, be careful, trust, and always read the fine print when you go into financial products.
Yeah, thank you so much for being here today, YT. And by the way, guys, YT will be present on in our physical event on the 26th of April. I hope you'll be there, right? Hopefully.
Yeah. I don't want to take it.
Yeah,
It's Han's event, right? So
yeah,
Han, who was my co-founder at RinggitPlus, he's a licensed financial planner. These sessions he does are really good, right? He used to offer them to RinggitPlus customers. So it was be Han's event, but then I think that we'll take some questions together afterwards, right? Which would be really fun.
yeah. So if you guys don't know what's going on the 26th of April, which is the following Saturday, yeah, the co-founder of Ringgit Plus will be hosting a financial planning event. Okay, just click on our bio, it's right there, the upcoming events, right? And YT will be a part of it as well. We will have a small panel discussion after the 3 to 4 hour crash course, okay, which includes Han and YT. We will sit for about 10 to 15 minutes, probably stretching to 30 minutes, and taking some of your questions, okay? So if you do want to join the event, just click on our profile and click on our upcoming events. You will find out more details there, and you'll be able to meet YT, Han, and me in person as well. So yeah, can't wait to see you guys. Okay,
Fantastic.
thanks again so much, YT, for doing this.
Thank you.
Yeah, bye.
Okay.
Stay safe.